Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be looking at some of the news updates in the past week. So first, let's look at the technical view of the Nifty in NSE. So as we can see here, these specific news items have been sourced from Money Control. So we'll keep the link in the description so you can have access to them. So let's get into the topic. The first is the technical view. Nifty has formed a bearish candle and shorts can be considered if the index closes below 11,490. So Nifty has erased all its gains in the last hour of trade and closed lower on July 12th as the traders turned cautious ahead of Infosys Q1 earnings and economic data which will be announced. The index has failed to hold on to the 11,600 levels and formed a bearish candle on daily as well as the weekly charts for the week. The index has lost 2.18%. The strength in the market is possible only if the index closes decisively above the 11,600 level, but if it breaks the 11,490 on closing basis, then there could be more selling pressure according to experts. Nifty, after opening marginally higher at 11,601, slipped into the red in the initial hour itself, followed by a range-bound move. The index gained strength again in late morning deals but was caught in a bear trap again in the late trade and closed 30 points lower at 11,552. Now let's look at this in the charts. So as we can see, this is the daily chart and each candle is for the 1 day. So as we can see in the Nifty 50 NSEs, today, on Friday, Sensex Nifty has ended at lower and it has formed a bearish candle. So now let's look at how it performed if we put a 30-day candle, 30-minute candle. Okay, so this is the 10-minute candle. So as we can see, the Nifty was in a range-bound movement. So this is 12th July's charts, candlestick charts. So here we can see it went slightly high, went on a small bearish trend, and then it was range bound a little bit, and in the afternoon it went high, giving a little bit hope before dropping again and ending at a downward trend. So this is what they are mentioning today. So, according to Mazhar Mohammed, the chief strategist, technical analyst, and trading advisory in ChartView India, so although sentiment is looking weak as Nifty has given up intraday gains before signing off the session with bearish candle on daily and weekly charts, the said index appears to be consolidating around its demand line of multi-week ascending channel which is in progress from the highs of the 10,941 registered in December 2018 with multiple touch points validating its strength. He said as long as the index sustains above and consolidates inside the said channel whose support is placed around 11,530 for the next session, bulls will still be having a fair chance of making a comeback. In this regard, a close above the 11,600 levels can be considered as an initial sign of strength in the index. So in other news, on the option front, the maximum put OI is at 11,300, followed by 11,500 and 11,000 strikes, while the maximum call OI is at 12,000, followed by 11,700 and 11,800 strikes. Significant put writing is at 11,400, then 11,500 strike, while call writing is at 11,700, followed by 11,600 strike. Option data suggests a trading range in between 11,400 to 11,800 zones. India VIX fell by 4.49% to 11.91 levels. Lower VIX levels suggest consolidation likely to continue in the near term, according to experts. Nifty Bank was also caught in a bear trap, dragging the market. The index closed 115 points lower at 30,601 and formed a bearish candle on daily as well as weekly charts. The Nifty Bank has immediate support at 31,400 to 31,200 zones, while resistance is coming near 30,850 to 31,080 zones, according to Singer. That is Rohit Singer, the senior technical analyst at LKP Securities. So that's for the technical view. In other news, Infosys net profit was down 6.8%, albeit beating Q1 estimates. Let's look at the top 10 takeaways. So the net profit of Infosys was around 3,802 crore rupees, and it rose 5.3% on a year-on-year basis but fell 6.8% sequentially. So the rupee revenue rose marginally at 21,803, which was higher than the CNBC TV poll. It rose 1.2% on a sequential basis, while on the year on year basis, the rise was about 14%, which is definitely a positive. The dollar revenue grew by 2.3%. The revenue growth was slightly lower than the estimate, and in guidance wise, the Infosys increased financial year 2020's revenue growth guidance range to 8.5 to 10% in the constant currency. Then in the digital revenues stood at $1,119 million with a year-on-year growth of 41.9% and sequential growth of 8.6% in constant currency. The percentage of total revenue from 33.3% 8% in the March quarter to 35.7% in quarter ended March June 30th. So let's look at margin. The margin stood at 20.5% and it fell on a sequential basis. The Infosys margin stood at 21.44% in the previous quarter. Next, let's look at the buyback. The company is on track towards completing its previously announced share buyback of 8,260 crore rupees. The company has to date brought brought back shares worth 5,934 crore rupees. The company's current policy is to pay up 70% of the free cash flow annually by way of dividend and or buyback. Also in other news, the FPIs have pumped in 2,596 crore rupees in June, and let's look at that. So according to FPI net investment in 2019, in June it's been 2,596 crore rupees. According to NSDL data, total overseas investment in June was at 13,111 crore rupees, including 8,319 crore in debt and 2,196 in hybrid securities. Next, let's look at the FPI investment in the insurance sector, which stood at 3,110 crore rupees. Sectors with the highest FPI inflows in June 2019 showed insurance being the highest with 3,110 crore rupees, followed by capital goods with 1,831 crore rupees, NBFCs getting 1,792 crore rupees, followed by automobiles and auto parts with 1,400 crore, electric and other utilities getting 988 crore rupees, followed by coal with 351 crore rupees, and healthcare investments with 326 crore rupees. So FPI investment in software and services sector shows that June 2019 having a reduction of 2077 crore rupees. So that's the biggest decline as the FPI sold 2077 crore rupees in the sector. The sector has remained seen outflows for 3 consecutive months, having witnessed the highest foreign fund flow outflow last month. Let's look at sectors with highest FPI outflows in June 2019, led by software and services, then pharmaceuticals and biotechnology, followed by banks, construction, then food, beverages and tobacco, textiles, apparels and accessories, lastly marine, port and services. So the outlook moving forward, the foreign investors have been net sellers so far in the month, having treated 4,776 crore rupees as on July 11th. A further decline in FPI inflows is likely after the finance minister, in her maiden budget speech, hiked the surcharge on tax paid by the super rich. So earlier, a surcharge of 15% was levied on a tax of 30% for their earning for those earning more than 1 crore rupees. Now, Sitharaman has proposed to increase the surcharge to 25% for those with taxable income from 2 to 5 crore rupees and to 37% from those earning more than 5 crore rupees. Hence, the taxable income for the two classes will be 39% and 42.74%, respectively. This will impact the major overseas investment. Nonetheless, the announcement has not rendered into actual selling from FPIs as they have remained net buyers in the next three sessions post budget before turning into net sellers in July 11th.